Today, Sunday, July 2nd, Tesla announced that they had delivered more than 466,000 vehicles, beating Wall Street estimates. Some analysts are saying that this will send bears into hibernation, which is very bullish on Tesla. There are also some analysts saying that despite this record delivery number, the stock won't go up. So to settle this, as usual, we'll analyze unusual options activity on the last trading day, Friday, June 30, when we detected unusual options activity. So without further ado, let's get right to it. So here it is, June 30. You'll see here this trade was done at the same time. So this trade was together, 4,100 of them, August 18, 260 strike calls and 260 strike puts. Okay. However, notice there's also another 3,000 here at the same strike price and expiration cycle. And here is also 2,100 of them, also the 260 strike price calls and puts, August 18, right? There's also some more down, lesser quantity. And so if we take a look at the total, look at the August 18 expiration cycle, which is 47 days away, you'll see that there was at least 12,000 in volume for the 260 strikes, right? And also on the call side, there was 13,000. So we know that there was at least 12,000 here. And we also know that since that's greater than the open interest on the put side here of 4,000, that these were opening trades, right? On the call side, it's also 12,000 is greater than 10,000. Okay? So what we believe they're doing here is that they're buying the 260 strike puts and selling the 260 strike calls. Okay? And by selling one of these calls here, which is a naked call, unless they had shares of Tesla already and they were just selling it, then it's not completely naked because they have stocks to cover it. But if they were to put on this trade, which is a synthetic short position, as you can see here, the buying power that was required per contract is about 12,700 to sell that call naked. So there is a way to quickly calculate that. Click the link here for the video if you don't know or curious to know how to do that. Very easy method. We want to multiply it by about 12,000 contracts just to get an estimate of how much capital buying power was required to put on this trade, which is $152.4 million. And then we can see here, obviously a short position, bearish. As the price goes down, this curve goes up above this zero profit line. So that's profitable if it goes down. Okay? And it's a loss if it goes up, since this line is below the zero. You see that also here on the deltas, negative 100. So basically shorting 100 shares of Tesla stock, because one stock is -1 if you short it. Okay. And so that is our analysis on Tesla at this time. And keep in mind that maybe these unusual options did not take into account the delivery number that was announced today, because this was June 30. Or maybe they did have this information, because we know sometimes these large institutional investors trade on inside info, right? So who knows, right? And comment below on what you think is going to happen to Tesla tomorrow, based on what happened today with the delivery numbers, or what you think about in general. What's going to happen to Tesla? Is Tesla stock going to keep going up, or will we go back down? Okay, because we also read some saw some data, just the historical data, just saying that if stocks go up double in 1 year, that they don't tend to go up much higher after that. So something to take into consideration. There was some report about that. But comment below on what you think is going to happen to Tesla. And as usual, smash that like button. And if you're interested in other stocks where we analyze unusual options, click the join button on our channel membership. And we also show how we trade using different trade strategies as well. All right, take care, everybody, and good luck.